Hey there, investors. Welcome to our channel. Today we're diving deep into one of the most exciting, talked about, and possibly game-changing companies out there, Palantir Technologies, ticker PLTR. It was started with money from the CIA, became famous for helping find Osama Bin Laden, and worked behind the scenes for governments and big companies for years. Now, Palantir is right in the middle of the artificial intelligence boom, and the market is super excited about it. But what exactly do they do? Why are they so special? And most importantly for us, as investors, is all this excitement real, or are we looking at a bubble that's about to pop? In this video, we're going to break down Palantir. We'll explain how their main system, called the Ontology, works. We'll see why Wall Street loves them, and of course, we'll look at the hidden risks no one tells you about. Stick with me until the end, because what we find out might totally change how you see the future of technology. Let's get started. What is Palantir, beyond the spying? To understand Palantir, we first need to understand the problem it solves. Imagine a huge company. It has sales data in one system, logistics data in another, emails, spreadsheets, sensors in its factories. It's a mess of disconnected data. Palantir isn't just about pretty charts and graphs. It creates an operating system for entire organizations. It has two main platforms. One, Gotham, where it all started, focused on governments, defense, and intelligence. Think about threat analysis, troop movements, and complex investigations. It was Gotham that built Palantir's reputation as a powerful tool. 2. Foundry, the big bet for the future. It's Gotham's version for the business world. Companies like Airbus, Ferrari, and Merck use Foundry to make their supply chains better, speed up drug research, and manage complicated production. The goal is the same, to turn data chaos into smart decisions. But how does it do this in a way no one else can? The answer is in a concept that sounds like it came from a philosophy class: ontology. The heart of Palantir, the ontology structure. This is the most important part to understand Palantir's competitive advantage. Forget everything you know about traditional databases. Ontology is a different approach. A normal database stores data in tables. Palantir, using its ontology, turns this data into digital objects that stand for real-world things: a customer, a product, a machine in the factory, a money transaction. But the clever part isn't just making the objects, it's showing how they're all connected. The ontology creates a digital twin of the whole company. Why is this a game changer? Because it lets you ask tricky questions, like you're talking to someone who really gets your business. Instead of a programmer having to write complicated code to join the supplier table with the parts table and the production table, a manager can just ask. The ontology already understands the connection between the supplier, the chip, the car, and the customer. It gives you the answer in seconds. It doesn't just read the data, it understands what it means. And there's more. It's a system that can both read and write. The manager doesn't just see the problem, they can try out solutions in the platform. What if I use supplier B? And even take action like creating a new purchase order right from the screen. This creates a closed loop of data, analysis, and action, which gets smarter and smarter. This structure is Palantir's real advantage. Once a company maps its whole operation into the ontology, leaving it becomes super expensive and complicated. It's like trying to take out the nervous system from a body. Why is the market so bullish? The investment thesis. Okay, the technology is impressive, but why have PLTR shares exploded? Let's break down the investment thesis into 5 key points. 1. The catalyst, AIP, Artificial Intelligence Platform. In 2023, Palantir launched AIP. Think of AIP as a layer of generative artificial intelligence, like ChatGPT, that sits on top of the ontology. This was a game changer. Now, any employee, even without technical knowledge, can talk to the ontology and get complex answers or even automate tasks. This broke down the barrier to entry and accelerated adoption in a brutal way. 2. Explosive growth in the commercial sector. For years, Palantir was seen as dependent on government contracts, which are slow and bureaucratic. With Foundry and AIP, growth in the commercial sector, especially in the United States, has been meteoric. Revenue from the US commercial segment grew more than 90% in recent quarters. The company is proving that its technology has massive appeal outside of government. 3. Robust economic moat. As we saw, the ontology creates very high switching costs. But that's not all. Palantir has almost a 20-year advantage in R&D, creating intangible assets that are difficult to replicate. The net retention rate, NRR, is around 120%, which means existing customers not only stay, but they spend 20% more each year. They see so much value that they expand their use of the platform. 4. Enviable financial health. Many hyper-growth tech companies burn cash. Palantir does not. It has already achieved consistent profitability, has billions of dollars in cash and securities, and most importantly, no debt. This financial strength gives the company immense power to invest and withstand any economic turbulence. 5. A gigantic addressable market. How big is the market for a platform that can optimize any company or government in the world? It's a multi-trillion-dollar question. Palantir is moving out of the defense niche to become a fundamental platform for the digital economy. If Salesforce became the standard for sales, Palantir wants to be the standard for operations and decision-making. The growth potential, if this vision comes true, is simply massive. Risks and uncertainties, the other side of the coin. But hold on, before you put all your money into PLTR, we need to be realistic. The investment idea comes with big risks. Let's talk about them. 1. Super high valuation. This is the biggest risk. Palantir is being traded at really high prices compared to its earnings. The current price already expects almost perfect growth for the next few years. Any bad news, any slowdown could make the stock drop a lot. The market is super excited, and being too excited can be dangerous. 2. Paying with stock. Stock-based compensation. For a long time, Palantir has paid its employees well with company stock. While this helps everyone work towards the same goals, it also means your share of the company gets smaller. So every time new shares are given out, your part of the company shrinks a little. The company is trying to fix this by buying back its own stock, but it's still something to watch out for. 3. Competition and not knowing the total market size. Even though their system is special, Palantir isn't the only player. Big companies like Microsoft, Google, AWS, and even Snowflake are all in the data and AI business. The risk is that one of these big companies makes a good enough solution that makes it harder for Palantir to sell their stuff. Also, how big the market really is just a guess. If that guess turns out to be too hopeful, the idea that the company will grow a lot falls apart. 4. The Alex Karp factor and company culture. The CEO, Alex Karp, is a bit unusual but very smart. He's a big part of Palantir's creative culture. This is a strength but also a risk. The company relies a lot on his ideas. Plus, their secret nature and work with governments can lead to problems and hurt their reputation. Conclusion. Is it worth investing in Palantir? So we've reached the million-dollar question: is Palantir a buy or a bubble? The truth is, Palantir isn't a stock for the faint of heart. It's an investment with high conviction, high risk, and very high potential for returns. The bull case is based on you believing that the ontology structure is a lasting competitive advantage, and that AIP will be the engine to capture a huge slice of a trillion-dollar market, making Palantir the standard operating system for the companies of the future. The bear case, or caution case, is based on you believing that the current valuation is unsustainable, that competition from tech giants will crush their profit margins, and that the promise of growth is already more than reflected in the stock price. My take? Palantir is, without a doubt, one of the most important tech companies of our generation. Their approach to solving the data problem is fundamentally different and better. However, the stock price today demands that investors have a very long time horizon, 5 to 10 years, and tolerance for extreme ups and downs. It's not a stock for a quick trade. It's an investment in the idea that the deep integration of data and AI will become the backbone of all large organizations. If that happens, today's price might look like a steal in the future. If not, the drop could be painful. What about you? What's your opinion on Palantir? Are you hopeful, or do you think it's a trap? Leave your thoughts in the comments below. Let's have a high-level discussion. If you liked this analysis, don't forget to give it a thumbs up, subscribe to the channel, and turn on notifications so you don't miss our next videos. Always remember, this video is not a recommendation to buy or sell. The goal is to give you the tools so you can do your own research and make the best decisions for your investments. Thanks for watching, and see you next time.